The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends? And of course, as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? Well, we're off 9 points on the S&P cash. We went briefly above resistance, which started at 24.50 on the S&P cash. We did that yesterday. And to the close, came back a little bit. We're off 9 points. Volume is even lighter than the move up yesterday. I think we started at 1.7 billion shares on the show yesterday, or at 1.6 billion and some change. So there's not a very strong pattern out in the market developing. We'll see how volume comes in today. But it looks to me like we're going to have kind of just a lower trading range out here. Now, if you are bullish in the market and want to buy something and go long, I suspect from my models that what you're looking for is a pullback to somewhere around 24.30 in the S&P cash. Now, could we get that in the next couple of days going to the weekend? We could. Then we set up for next week, which, of course, we basically get into Wednesday into fund buying. So, you know, if you could pull back a little bit, kind of weak, 29th, we get into the 30th, it should have a pretty good floor. We're going to get into September, and we'll find out whether or not the big bad bear is out there for September. Right now, we just have light volume up and light volume down, so I'm not going to get too excited. But we tried to go through resistance on the upside, which was 24.50. We failed on that. We're pulling back a little bit, no volume. We're pulling back on no volume here today. And my guess is that we kind of tick on back down below that 24.30. Could we get back to 24.20? We could, and that would be even sweeter. We could find, you know, if volume remains light, then you may have an opportunity to actually buy some fairly decent stocks at the lows, at least for a short amount of time. I'm not making long-term prognostications, but maybe a week or two. I think we've got something kind of brewing here. In the meantime, unless you're trading on 5 or 10 minute charts, you're probably going to get a lot of chop. So if you're swing trading like me, maybe the best thing to do is just kind of sit on your hands and wait for things to kind of develop. We don't quite have that yet. But my guess is slow volume move back down to 24.30 and then a possible bounce from there, maybe through fund buying. We've had a lot of people sell. That's kind of dried up. Should be getting trend tabs here in the next few days, and that will tell us whether and how much fund buying is actually going to come into the market. So that's about it. Light volume down on 9 points, probably coming back down to some kind of support level. And at that point, maybe we can jump on some stocks and buy some things at the lows for a rally in September or a crash in September. Either one. Well, I'm sanguine about which way that we go because there just isn't a lot on either side to make me want to pick up the pitchforks and go storm the Bastille just yet. As always, we'd like to start off the show with a little history.
That it's all just a little bit of history repeating.
On this day in 1939, Germany and the Soviet Union signed a non-aggression pact, stunning the world, giving their opposed ideologies a little rest. But the dictators were, despite appearances, both playing to their own political needs. and both trying to get ready to attack each other. Within less than 3 years, the Eastern Front, depends on which side you're on, doesn't it? The Germans' Eastern Front opened up, and some of the worst slaughters ever in military parlances were given on that Eastern Front. First by the Russians with old Joe Stalin, who didn't really care how many people died on his side. And then eventually the Germans, where Hitler didn't care how many people died on his side. So, yeah, that was a tough one to go after, wasn't it? Hitler, Stalin. Everybody wants to get on Hitler. But, Stalin killed actually more Jews in the early 50s than Hitler did in his war. So, but he just doesn't get the love that Hitler does. Sure, Hitler's looking up at us, not down, wondering why. But what can you say? Communists kind of get a free pass, and that's the way it's been. People just think that communism is so great. On this day in 1939, a axis of two evils stares each other down, and they both decide to go away and fight yet another day. You can always give me a call at 877-927-6648. And what else do we have going on? I think that's about it. I don't think there's anything else really to talk about before we get into charts. Yesterday, I kind of opined that Salesforce had a lot of problems going any higher. Basically, they were at astronomical levels. Their CEO is kind of a tyrant. And what else can you say about it? A lot of people, you could say Steve Jobs was a tyrant too. Sometimes that's what it takes. But this is a different kind of business. This is not all about revolutionary products like Apple. It was all about evolutionary engineering in Salesforce. They're not basically building one thing that changes the world that they release on one day. It is a cumulative effort. Generally, cumulative efforts don't do well with revolutionary type leaders. Just talk to Che Guevara. He didn't get that far. And that's kind of it. So you spiked up. You were lower last night after the bell. You got up to 94.63 today. It rolled all of that back, and you're kind of hanging out here. Is this a horrible company? The answer is no. Is it wildly overpriced? Yes. Do they have to have incredible an incredible run in the next year to support this price? Yes. Could it happen? It could. I suspect, though, that it's a lot more evenly matched than it was over the last 2 or so years against its competitors at Amazon, Microsoft, Google. There's a handful of companies that are really kind of coming after what Salesforce did the pilgrimage on. So we'll look at this a little more when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And there's been a lot of gluten talk in the Tiger's Den here lately, and it always makes me think of this great little bit from Subway.
The world outside is hanging on by a very thin, non-GMO, cruelty-free organic hemp thread.
Maybe that was the other one that had that kind of like dead mouse. I can't remember. I always loved that bit though. And talking about loving the bit, well, Walt Disney has gone off the deep end. They're in hot water. Fighting bigotry by being bigots, apparently, is their new motto, and that is, if you haven't heard, they just figured that people were too stupid to know that the person that they had on as a commentator on a basketball game who was Asian was not, in fact, a Civil War veteran. So they moved him off of it, and they're catching holy hell because eventually, if you go down this road, you're going to jump the shark. And Walt Disney has done it, catching a lot of heat today. Not a lot of volume, but they are down at these lows. Their management been rather flaky, I'm going to say, over the last 6 to 9 months. And I think that's the biggest issue. They have lower viewership on ESPN, which has turned into a circus. Has very little to do with sports. Watched it a couple of times. And you know, I can imagine if I had any way to get out of the package, I don't watch it anyway, I'd probably get out of it. But I think the bigger problem facing Walt Disney is continually getting their hands caught in the cookie jar with items like this, especially in the weak part of their business like ESPN. But also bigger, they spent $4 billion on Star Wars, and that looks, and they continue to talk about it, may blow up in their face. Of course, we said something about this a couple of weeks ago where they fired the directors of the next big Star Wars movie and hired Opie from Mayberry RFD. I always called it Mayberry BFD, but Mayberry RFD, and hopefully he can put it back together Of course, the last 3 of his movies have been flops, so you don't know what's going to happen on that. Anyway, continue to be kind of a flaky bunch, in my opinion, and the CEO getting kind of long in the tooth. I think they need to get somebody that figures out who their core customer is, and it's not this bunch. Anyway, I think that there's a good chance this thing is headed back down to at least this gap at 95. And if things don't improve in the movie business for them, especially their troubles in Star Wars, I think you could see that 95 fairly easily this fall. Yes, Iger has gone off the deep end. It's like anybody that, when you have a small group of people and you reinforce each other's ideas, you don't know when you're really doing stupid stuff. You just go off the deep end with the rest of them. And we'll bring this up later. It could be. You never know. Yep, ESPN jumped. They didn't jump the shark. They jumped a whale and a shark. So that's it. Okay, yeah, I think 95, that gap is where they're looking at. 92, 89 is really a better spot that goes back to October 13th. What else do we have out here? Wanted to look at a few other things. Take a look. I'm just going to have a lot of fun today. As I said, I'm kind of waiting for one good signal one way or the other. We got one last week. We made some good money off of it. It lasted all of a little bit more than a day. And then we kind of went a little lower, but I wouldn't have made any money or more money holding my position, so we sold it at the right time. And, let's talk about other ones. NFLX, Netflix. Take a look at a few of these big flyers, see if they're happening. We talked about this one possibly being a fairly decent buy at this 164.23 low on August 21st. I kind of like this CEO because I haven't heard anything out of his mouth. Every other CEO in the world's blabbing about things that probably aren't going to help their business at all, which means they've lost focus to me. And you got that 164.23, again, if I was a bull, I would be hoping we pull back Monday, maybe into Monday and Tuesday. We continue to have light volume, and then we go into that fund buying, and that may tee up a little pop into September. If we get no fund buying, then that sets up a big sell pattern into September too. So I think what was the guy's name, the New York baseball player, who said, when you come to the fork in the road, take it. Well, anyway, I think that's what I'm waiting for. I'm waiting for the fork in the road. I know it's coming. It's just hard to tell. So what else? Okay. Anyway, 164. It still looks nice. Volume's light. You're down today on 3 million shares. Could you get one more bite at the apple at 164? I think you could. And especially light volume last couple of days. If the market continues to show kind of a little bit of weakness out here, we're off 7 points right now. Could we just eke on back down into that 2430 area on the S&P cash light volume and set up a bullish move? I think you could. Volume is confirming that we are coming back at least today on lighter volume. 1.72 billion shares on the New York Consolidated tape. Okay, got some email. Look at Apple today. Is it actually doing anything? I didn't think so. Just everybody always worried about Apple. It's up on light volume, I can tell you that. 155 is kind of support area right now. Again, you'd probably like this thing to come back to 155 if you're bullish on it. Come back on light volume and set up a rally into the fall. That is one possibility. Of course, it could break, but it certainly does not show that from the volume in a lot of these individual stocks. What else did we have out here? I want to take a quick look at Tesla.
Aren't electric cars made from plants and old Ralph Nader stickers?
Well, I'm not exactly sure if they are, but they could be. Tesla is got a nice little bounce out here today. And what can you say? That was kind of the buy signal. I couldn't get real bearish on this stock. It did gap up. It did have some decent volume back on the 3rd of August, up on 13.5 million shares. Came back down into that 6.5 million shares on August 21st. Nothing day yesterday, and we're starting to move up. Is the volume going to be strong? No. Now, I've seen this pattern several times, and I'm not going to say that I would be going long Tesla here. What I would say is that you're going to probably get at least one, if not two tests of about 370. And these highly shorted stocks can't get through on the next couple of tests out here. Watch out. This may be the wind up before this thing starts to unravel this fall. Lots of competition comes out.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, yes, the electric car.
Ooh, wow. Check out his brand new electric car. That's hot. Like our planet.
Oh, I've got a ton of these. I can just go on for hours. Anyway, we're looking at Tesla. What I wanted to bring up here is how close this is in a pattern. And it's going to take a while. But this pattern is pretty much like the one that I hit not just a home run on. It was one of those World Series kind of trades that goes back a while on the BIB, where we had options puts on it, and hopefully this thing will come up. I think it's going to have to go back a little bit longer. My internet is not cooperating. It may go back 2 years. I think it was 2 years. Where was that? I got to find out. Maybe has it been 3 years already? Well, let's go back and look at 3 years and let me find it. Yeah. This part right here on the BIIB, this is kind of what you get when these things top out long term. And I'm going back to the March 20th, 2015 high. This thing came, it failed. Then they tend to just kind of meander around in these trading ranges, and you just get no volume. And I think we were buying puts somewhere around the 15th of July. I think so, when this thing just fell apart in that August. And never got any better. But especially when the stocks kind of come off on heavy volume, there's huge short interest. It's fairly easy to keep running the propaganda wagon on the stock like this one did for a while. It was very apparent that there were a lot of sellers in this, but every time some sellers would get this thing moving to the downside, there would be, 5 more analysts on CNBC pimping this stock out. When I saw a bunch of people really pushing the stock and it had no juice left in it, is where I pulled the trigger. But this thing, it had a fairly good pattern out here. I'm just saying that you kind of get this kind of really sidewards, mushy action. Mushy action is what I'm trying to say. And when we go back to Tesla here real quick, take a look at that. I kind of got that right here. We came off, we went down to 303. We rallied here. Now this thing's going to go sideways for a while. If you could get back up once or twice with lighter volume and then it turns to dust around 370, I think the reality that there are going to be 40 cars competing with Tesla where there hasn't been much. In fact, I got a email yesterday inviting me to go drive a Fisker, if you can believe that. Remember that company? Well, it's back, and its car looks like sex on a stick. It is at least from the pictures, looks pretty good. So we'll see if it's any better than the Fisker that was out there before. But I don't think it's Fisker that's going to throw a monkey wrench. Haha. That's actually a fairly decent metaphor. I'm not going to win this year if I keep using the right metaphor and not tangling them a few together. But anyway, Tesla is going to see probably 40 cars in the next couple of years going up against them. They'll have local dealers. They won't have laws against them. And my guess is that their supposed 26% gross margin turns to the reality of about 6 to 8% gross margin would make this company a $40 stock. I think long term, it's hard to tell, but long term, this is at the current growth rate it has, it's never really gone over $40 a share for what it should be when you figure in the massive amount of infrastructure that has to be built to get them anywhere close to the price that they're at now. They'd have to be selling somewhere around 1/3 of all cars in America, and it ain't going to happen. They aren't going to be able to hold those margins, and they aren't going to be able to sell 1/3 of the cars in America. Could they be a 10% winner sometime? They could. That only makes them an $80 stock. So, when does that get back to reality? It's hard to tell. There's a lot of people trying to compare this to Amazon, and Amazon grew over time. All it had to do was get people to ship them more products that they could ship out the door and get a little bit of credit. There was a lot of infrastructure buildup for Amazon. but it's a drop in the bucket compared to what it costs to assemble cars, to do all the R&D for those cars and get them out the door, and then try to hold a 26% gross margin against a industry that at its highest is about 10%, and its average is somewhere around 7. So just a thought out there. Okay, anything else? Do I still like UNG is a question. I still do. I haven't bought it. I think I'm waiting for, again, a bigger Yogi Berra. That's who it is. I couldn't remember his name right then. It's like deja vu all over again, Yogi Berra. So we'll do that. Okay. What else do we have? Okay. Yeah, I don't think there's anything new out here. This is kind of the time to really get fired up about natural gas. It's somewhere in here statistically over about 20 years. This is when natural gas tends to find its bottom. Today, it's kind of down, mostly because oil's up. There's almost always there's one of the biggest statistical inferences between oil and natural gas, and that is because most of the people that have oil are actually short natural gas when they're long crude, and long natural gas when they're short crude. And so that's always coming on and off. It's up 3 cents for regular gas today, off almost a penny on natural gas. But it looks like this $3 level is where, when natural gas breaks it, is when it's going to start making its run for the fall. Could it get back up to that 6.50 level? It would take a very cold winter, but could you see $5? I think you could. So we'll see. Again, a lot of it has to do on the weather, but we're right in this sweet spot where you want to kind of be watching natural gas on a daily basis. What else do we have? Take a quick look at Microsoft on this down day to see if they've got anything going on. Earnings, of course, threw them a little bit of a curve. They've really just been going sideways. I went out and did some research because I didn't think that there was much going to happen today. So at about 10:30, I went. Had other things to do anyway. But while I was out, I stopped at the Best Buy in downtown Tampa and the Clearwater Best Buy on the way home, and I saw the same thing. We'll talk about that. That's what they call a tease in industry. Tease. We'll be back in a minute. You'll see what I saw.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And as I said, I went to Best Buy, and it was a ghost town at both of them. And of course, it's 11:30 in the morning. You don't have a lot of traffic, but kind of interesting to see, maybe 4 employees in both stores. Maybe there were more hiding in the back or something, but very, very light traffic. But that wasn't the reason I was there. What I wanted to do is go by the aisle of video cards to see how well NVIDIA and AMD was doing. There was a full stock of the AMD cards on the shelf. There were no NVIDIA cards at either store I went to. I asked both the salespeople the same thing, which is, what's happening? And they said, you know what? It's kind of tough to sell. As soon as we get one in, it's gone that day. And we really are having kind of a tough time keeping these things in stock. Now, this thing did go to a higher high on lighter volume. It pulled off. It's got 2 huge gaps. And one of the things that would always keep me from shorting a stock with 2 huge gaps is the thought that you're going to get a third. This thing does look like it's kind of setting up for that. I'm thinking that they get competition somewhere in the fall sometime, but I think you're going to get one more earnings call between now and then, and that earnings call may be the last big gap up in this stock. So I would not probably be rolling the dice here that they just fall apart. And, of course, when I got home, I called a company called Newegg. If you buy a lot of pieces, parts, and build your own computers, Newegg is kind of the last big company out there with computer parts. It's amazing that Amazon hasn't decided to try to destroy them too. I figure it's just one day. They're not a public company, but Amazon's done everything but get into that business. So it's the last thing that maybe they want to do. But Newegg sells a lot of great components. I would say that they're very Amazon already. They've adapted a lot of the stuff. They do a lot of the stuff that Amazon does. But called them and asked them what availability was, and they said it's very tough to get the high end of the spectrum for the cards. So I would say that maybe what you're looking at here is one last gasp in NVIDIA. If you can't find the product, it normally means that they have one or two things. One, they've got a production problem actually building them, which I couldn't find anything that said that, or they're selling everything they can get. And I suspect that is the latter part of that right there. And, of course, I bought a couple of their expensive $700 cards the beginning of the summer to do some machine learning, and we'll continue to keep kind of an eye on that. Now, Best Buy itself, like I said, there used to be a guy that ran around on Wall Street. I'll think of his name here eventually. Kind of reminds me of that artist in New York that drove drew the 4 color pictures of Campbell's soup. I forget what his name was. He was I think kind of a drugged out looking weirdo kind of guy. Everybody thinks he was so brilliant. I just kind of like, well, maybe somebody else. I could have done it. That's someone's got to do better than I can do if you're going to call him an artist. Andy Warhol, that's who it was. Anyway, we've got Don from Alexandria. How you doing, Don?
Hey, hi, Dave. Yeah, Dave, I was thinking about copper. Am I too late to jump on the bandwagon? I'm looking at FCX and Southern Copper. Little swing trade.
Well, you just broke the previous high. What are you thinking on here?
I'm thinking, FCX still looks pretty strong to me. Maybe Southern Copper's cooled down a little bit.
Your last high on July 26 came with 74 million shares. Yesterday you got into it with 32 million shares. Today we're up on 13 million shares. So what do you think? Sounds to me like pretty light volume, right?
Well, that's typical of this time of the year.
Yeah, I'm not saying it's not. Yeah. I wouldn't short it.
Mm-hmm.
But I would say that there's 2 places that you might get an opportunity to buy this. And that's what I'm kind of hoping for. There's a lot of stocks that are kind of just meandering around here, but there's no clear signals. 1425, if you could get a fill of that gap with light volume, which I think you might be able to get. And then, of course,
You think it would retrace that much?
Oh, yeah.
Yeah.
Yeah, if we pulled back down to 2430 or 2425 or something on the S&P, I wouldn't be surprised at all to see this thing kind of drop fairly quickly. Maybe not have much volume. Then we get into fund buying. You know,
so the end of the month, right? With fund buying.
Yeah. What you have, just because some people are always new to the show, if you're running a big fund, there are money managers that buy your fund, and it is their job to hedge the positions. Not your job as a fund manager to hedge your positions. You're basically, by your contract, supposed to be long within the last 2 or 3 days of the month to the first 2 days or 3 days of the month, depending on what fund you actually have. So they have to buy 100% of the cash they have at the beginning of the month. Now, that kind of slides around. Do they go to jail if they don't do it? No. I've seen people in some of these funds go as far out as the 5th trading day of the first of the month to try to get a little bit of advantage because they think the market's headed back down. They're not going to buy in front of it. But they have to get involved at least by then, or the money managers are going to be ticked off at them because they're hedging the other side of that. And they've got to know that the fund managers are doing the right thing. So the money managers who are actually buying those funds are properly hedged out. And they can't do that if these guys are also trying to hedge their bets too, right? So there's this kind of dance every single month. That's the last 2 or 3 days of the month and the first 2 or 3 trading days of the month. And I should have said that, trading days, not the actual calendar day, right?
Right.
So there's a kind of a little spread out there. This one starts kind of on next Wednesday. We've seen over the last 3 or 4 months more and more that these guys are waiting till the very last minute to buy any shares. They're not doing it. So this may go until the 2nd or 3rd of September, which are already now into the 3-day weekend, right, for the fall. So if you could get kind of a nice pullback into that first, what is it, Labor Day or Memorial Day? Labor Day. Labor Day. You might find some very good setups, and that's why I'm kind of very much sitting back thinking that if I wanted to be long, the best thing that could happen to me is all of this stuff pulls back on light volume right into that 3-day weekend. And the best thing that could be happening if I want to go short is that this thing just kind of holds up on no volume into that 3-day weekend. But we'll see. Anyway, we're going to break here. Do you want to hang on, or is that it?
Yeah. Can I hang on?
Sure. We'll go to you. You only have 2 minutes in this last segment, so get locked and loaded.
Okay.
folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price, price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
With Don from Alexandria, Virginia.
Yeah, Dave, with between Freeport and Southern Copper, like I'm thinking maybe Freeport, looks a little bit better now because it's been Southern Copper's been out from the get-go, going on with this copper rally. But I understand that Freeport has some gold exposures. I don't know, does that help or hinder?
It does a little, but gold's kind of hanging out here. It's not really moving at the moment. GDX is up 0.5% today. It's kind of slowly gone higher. So you've got a little bit of that for you today. I'm just thinking if the market pulls back, that all these going to pull back a little. And for this thing to pull back $1 is no big deal. And I would think that if you're really bullish and thinking that you want to go long any of this stuff, I think you want just a little bit of a retrace out here. Whether it's 14.25 and that's all that you give up, which would mean that the stock's a little stronger. On a longer-term pattern, 13.25 would be a beautiful buy point on this thing. You would have gone up on huge volume, done the consolidation, pulled back to the breakout point on light volume, and had it. That would be the best of both worlds. It would take a little more time, but I just think that we could have at least a couple more events happen, maybe geopolitically, some other stuff. There's going to be some ups and downs, and I think those are going to be washed out by the time we get back from the Labor Day weekend, or mostly washed out. So if you're bullish or bearish, I think you kind of have to look at this as a big setup into that 3-day weekend.
Okay.
Anyway, I appreciate
Thanks,
the phone
Dave.
call, Don. And as always, so when you can, not when you have to. And we will see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.